In this video, I will be showing you how to correctly short or long cryptocurrencies on Binance's future trading. It's going to be a step-by-step guide with everything you need to know to the smallest detail. But before we begin, make sure you hit the subscribe and like buttons if you like this type of content. Now let's begin. Log in to your Binance account and go to the Futures tab, either from the fixed bottom navigation bar or through the main menu. First thing we need to do is make sure we have money in our futures wallet. I currently have almost no money in mine, so let's add some. Click on the arrow which takes you to the transfer section. Choose the wallet you want to transfer money from. In my case it's going to be the spot wallet to USDM futures. Choose what you will be transferring. You can short or long on anything you want. In this case we will stick with USDT. Enter the amount and hit confirm. Once we go back, we can see that our futures wallet now has a little bit less than 100 USDT. And before we proceed, we need to talk about a few things. First, what is shorting? Shorting is basically you betting that the price of a crypto will go down. Long is the opposite. You think the price will go up. So if you are shorting and the price goes down, you earn money. If it goes up, you lose money. Second, before you start this type of trading, you should know that shorting is more or less a gamble. It is very risky and you may lose your money. If you are not an experienced trader, use only a small amount of your portfolio. Okay, now that out of the way, let's look at the other stuff on the screen. On the top stays the market pair you will be shorting. If you click on it, you can choose a different one. In this case, we will short Bitcoin against USDT. The next thing we need to do is pick a margin. Clicking on it gives you two options, cross and isolated. Here I advise you to choose isolated mode only, because it is way safer, while cross margin is very risky. The difference is that when you use isolated mode and you short, if the price goes down and you have, let's say, $100 in your futures wallet like I do, and you use only 50 of them for the short, you will lose only the $50. But if you choose cross margin, the further the price goes down, the more money are taken from your account, keeping you from getting liquidated until all your money are gone. The next thing you need to do is select a leverage. Now let me quickly explain what it means. Leverage is basically you borrowing money from the exchange. If you have $100 and you use 10x leverage, you will be shorting with $1,000. It is very risky and I would personally never use more than 5x. For this video I will choose 3x and hit confirm. So now if you want to long, you have to hit the buy button. If you want to short, you need to hit the sell button. Next thing we need to set up is the order type. We click on it and we see a bunch of options, but those you need to know are limit and market. Limit is if you want to enter the short position when, for example, BTC hits 45k. You set it to 45k and when BTC reaches that price, the order will be submitted. Now market price is when you want the order to be submitted at the price BTC is at when you hit the submit button. Then below that you enter how much USDT you will be using. If you are using leverage, you can enter the money in your balance multiplied by the leverage. So for example, in my case, 100 USDT on 3x leverage, 300 USDT. Now one of the most important parts is to put stop loss and take profit. Remember to always use them to save yourself some trouble. Take profit, as the name suggests, will take profit if your bet is going good, when the price hits a certain target. Now stop loss will close your bet if things are not going good and will protect you from liquidation fees. So for example, let's put a take profit at 45k and a stop loss at 40k and hit confirm. When you click on position, you can see quite a few things. Now let's look at them one after the other. First, you have this P&L. This shows you how much you are currently in profit or in loss. ROE is the same but in percentages. Size is your whole bet with the leverage, and in margin is the amount you used from your futures wallet. You can also see the risk percentage. This is something Binance somehow calculates themselves. Now, entry price is the price you entered in the trade. So currently 43k. Next to it, mark price is the current price of the cryptocurrency. And to the right, you have the liquidation price. Now, liquidation price is the price at which you will lose all your money. That is why you need a stop loss before your liquidation price. But how can you calculate that? Well, you can just click on this calculator icon. It opens the futures calculator, and here you can calculate everything you need before you make the short order. As you can see, you can calculate your P&L, target price, liquidation price, and whatsoever. So let's calculate a P&L. So we entered the price at 43k. Our exit price will be 35k, so Bitcoin must go down to 35k. And we will be using 1000 USDT. We hit on calculate, and as you can see, we will manage to profit almost 200 USDT, almost 20% if the price reaches 35k. This was your step-by-step guide for futures trading on Binance with or without leverage. If you want me to make a video on a similar topic, let me know down in the comments. I would be glad to make some more educational videos. I hope you liked the video, and if you did, I would appreciate if you subscribe to the channel. See you in the next one.